Good morning, everyone, and welcome to the European crossover webinar. And we do have some data that's hitting right now as we start. That's why I wanted to go on and post this here on the German CPI data. So that's just has just hit, came in at 1.40. We had seen the euro dip a little bit lower in the European session, coming down to this 1235 level. We did some Asian analysis on several of the markets, including the cross rate here. Let's go move this out of the way. Looking into today's information at the top of the next hour, we are going to have Eurozone Sentiment is going to be out. The last month was 0.69. They're expecting still a little bit of a dip down to 0.66. As we come to the States, we know that we always have the weekly jobless claims here on Thursday. We do have a GDP, final GDP. Doesn't have the same move as initial look at GDP, but that'll be a GDP, jobless claims, into HICP German inflationary numbers. Pending home sales is going to come in at 10 a.m. Eastern. So final GDP and, of course, regular jobless claims and HICP preliminary inflation German numbers at that. Now that'll be at 9 a.m. Eastern. We'll move this out of the way. And moving forward, we did go in and see this euro continue going and dip lower. As I mentioned, we'd covered some of these markets, and we'll go over them in the Asian analysis, getting prepared for today. We even looked at a cross rate too. One of the guys had asked if we could look at that. And the other day when we had the New Zealand data coming out, I was talking to some of the folks in the chat room in the Asian session, and we'll be adding a couple more, at least two more cross rates this next week. And we were just looking at different ones to go and add. And we're going to get to that shortly and get into the Asian analysis. We're just going to cover the news quickly. I've seen the dollar yen continue to go on a weekend here. It looks like we made it all the way down to, almost at 110. And that was another market that we've covered here that just seems like it's just going to go on and slide its way down. We do believe, like I said, in time, and we saw a decent rally come off here, but it's having difficulty sustaining any moves. I thought we might be able to push up even a little bit higher. I'd taken a short, from a couple of days back, I think right around, what was it, 1060? Actually, I think I did sell it at the 1063 and covered, but I covered it in the Asian session. Let's see here. And the cable obviously continues to go and drive lower. It actually found support here at our bias chart support yesterday. We kind of moved a little bit higher. We've since rolled a little bit lower here. Same thing here. That's concerned that we'll just go on and slide further. And of course, one of the things that we're looking at yesterday with the dollar index was, are we going to be able to close above that key 96.81? And we did just that. We'll cover the Asian analysis on that. You can see we did get that close, and that opens the door for us to move much higher now here in the cash dollar index. There we go. And we're going to get to that. We have come in close to our resistance just above 97 initial, but I think we'll be moving higher as this momentum continues to drive this market higher. Let's go on and move into the news, and then we'll get into the Asia analysis, or the analysis we did on the website for basic technical, and get onto the bias chart for today. And one of the data that came out was March consumer prices, 1.3% year over year, the highest since November. Spanish national consumer prices at March at their fastest rate since November. That'll kind of help out the year a little bit. On the back of increasing fuel prices and as electrical prices declined by less than a year earlier. Spanish national inflation stood at 1.3% in March. European Union harmonized inflation was also at 1.3% year over year. Spain is the first major Eurozone economy to publish March flash inflation, followed by Germany later on Thursday. We talked about that. Spain is the first major, the Eurozone inflation figures will be announced on Monday, and a Reuters poll expects consumer prices in March to rise by 1.5% across the monetary union from a year earlier. And on to the morning bid. Even Theresa May's promise last night to quit couldn't persuade enough of her own party lawmakers to back her Brexit deal. And that was before the Northern Irish DUP torpedoed the move by declaring its resolute resistance to the plan. The talks today will continue to explore whether anything could convince the party to drop its opposition, but the chances look slim, casting doubt on whether May can schedule a third vote by the end of the week. Sterling is weaker on concern that an accidental no-deal departure on April 12th could happen, compounded by the results of Parliament's first round of voting on Brexit alternatives. That, in the wry words of one MP, showed that Parliament not only opposes staying in the European Union, but also opposed to every variant of leaving it. With the deadlock still as tight as ever, advocates of a second referendum have taken heart from the fact that the option involving a fresh plebiscite came out as one of the more popular schemes. Assuming May can't pull the rabbit out of the hat before then, second round of voting is due on Monday. Holy smokes. IMF Chief Christine Lagarde and a number of top European Central Bank and Federal Reserve officials are due to speak at a conference in Paris today called the Euro Area, staying the course through uncertainties. This taps into a non-concern about whether the ECB would have enough firepower to deal with a more concerted slowdown as it becomes clear that the bank missed whatever window there was to tighten policy. The bank's Vice President, Luis de Guindos, warned yesterday that weak growth could add to further instability further down the line by undermining bank profitability. With no binding flash of clarity coming from the Brexit impasse or deadlock of U.S.-China trade talks, world markets were left fretting about a cyclical downturn in the global economy and widespread central bank policy. U-turns on normalizing interest rate structures as the first quarter comes to a close tomorrow. A recession red flag is still waving in the 3 months to 10-year U.S. Treasury yield curve, which inverted for the first time since 2007 over the past week. It remains negative by 9 basis points on Thursday after 10-year nominal yields fell to their lowest level since 2017. Reuters reported that China offered new proposals for high-level trade talks with the U.S. in Beijing through Friday, but also the sides remain far apart on most of those sensitive areas. Wall Street stocks closed lower late on Wednesday, with Shanghai, Tokyo, and Seoul benchmarks falling. Bond markets in Europe are equally gloomy on economic prospects, and after the ECB President Draghi said on Wednesday that any planned interest rate increase could be delayed longer if necessary. Future markets have taken all pricing of an ECB rate rise of the horizon through 2021. Draghi also held out the prospect of aiding Eurozone banks of its main deposit rate to stay negative for longer. ECB sources say the bank was examining ways of tiering its deposit rate to do that. Moves rallied Eurozone bank stocks, but 10-year bund yields have sunk deeper below zero, and they were minus 8 basis points first thing Thursday, just above their 2.5-year low. And we'll take a close look on the bunds. I mean, we were looking at the daily charts, and we come into some resistance, but there's another little bit of a upper level. So if someone's trying to, take the other side, best to wait just a little bit longer. Starting weekend after Wednesday offer by UK PMA to resign, even if she gets her Brexit withdrawal agreement, and after confusing series of votes by Parliament on ways to break the deadlock. We won't spend any further time on that, but let's go on and move on. And the Canadian dollar, we won't spend too much time. It's just a recap, but we did go on and move lower, and we'll cover that in the Asian analysis also. The price of one of Canada's major exports fell after government data showed U.S. crude inventories grew more than expected last week as Texas chemical spill hampered exports. The gain in real exports was somewhat constructive for Canadian growth picture, Osborne said. Incrementally, we were getting a little bit more evidence in the early part of Q1 that growth is picking up a little bit. Separate from the statistics, data showed that non-farm payroll employees rose by 71,200 in January from December. Previously released monthly survey, the labor force also showed strong job gains at the start of the year. Canada's gross domestic product data for January is due on Friday. This will be a big mover here. British pound falls as Mayor fails to quit, or offers to quit. We already know about that. And lastly, the dollar edges up as more central banks turn dovish and defies the lower bond yields. The dollar edged up on Thursday as many of his peers weakened after more central banks shifted to a dovish policy and deteriorating global economic outlook. Treasury yields are indeed lower, but there isn't impacting the dollar very much as Treasury yields are still an attractive level to those in the Eurozone and now New Zealand, which has just turned dovish, said Takuya Kanda. The Euro's upside was limited after ECB President Draghi said the hike in annual interest rates could be further delayed. Growth-sensitive currencies have taken a beating on risks of the global economy, and New Zealand dollar crawled up 0.25% to 68.15 after sliding 1.6% the previous day. The Aussie dollar, which also moves in sympathy with the Kiwi, added 15 tenths to 70.96. And let's go on and move into the analysis. And we'll start here with the euro. So I put on here the euro found minor support in the 1240s, but difficult to be a buyer with bund yields falling to new lows. Target remains 1149 with minor support at 1228, followed by 1193. Resistance is 1293, and we'll go on and take a look at where we stand here on the euro. Now we came down here into a level we've had here, which is this 1235. We're looking here, just here, you see here, just in case they took that out, right down here to this 1228-ish area here. That's what we're looking for. We've got a nice little bit of a little hammer here. Now that probably the Spanish CPI certainly did go in and help to pull this off of the lows. And one of the things that we're referencing was the bund yields. And it's hard to be a buyer when these bund yields keep going lower and lower. We'll get to that, but let's just take a quick look at that. Well, right now we just saw this dip on that data, German data. You can see here, we're still hanging around here at these levels. And once again, like I said, when we take a look at this from a longer term basis, and this is just like up in the stratosphere. We're going to move into the daily. And certainly that's helped the euro, but as I mentioned, the resistance comes in, solid resistance comes in at 68.80. We weren't too far away from that. But like I said, we just had this market come off just a little bit. You see here, I mean, if you're looking at it from a little bit longer term basis, it doesn't even make that much of a move, but it has come off a little bit on obviously the good Spanish inflation data, and we'll see how the German inflation data comes out also. Moving back into the euro, that's my case is that although we found some support yesterday around the, well, I think we had 1246 in the lows with some like 1240 or something like that, or inverse to that. It's hard to be a buyer when these Eurozone, when these bond yields continue to go on and move lower. Hence my point. So if we do find any buyers down here, it's got the real resistance is going to come in here at 1293. We can probably dance around here, and if we get some good German data, probably allow us. But it's going to be 1293 where the resistance comes into place. And we mentioned the 1228. Well, we came close to that. We got as low as 1235. So the cable found support at the bias chart level 3142. This actually came in and practically nicked it right to the pip. We actually got a little bit of a bounce. We since moved lower though. But cable found support at the bias chart level 3142 after rejection of alternatives. You know, with a May offering to quit, and they tried what they call the tests, and they all failed. But the pair could see a further slide to 29.54 with a pause at 30.64. Resistance remains a bias chart, which is 32.65. So let's go and take a little bit closer look on the cable. That 32.64 has been holding this market at bay and held it also yesterday. But my concern is that we can still make a dip coming down here, and really the door is open for them to slide, and we'll see if we hit those stops. At least initially, okay, at least coming in today, I like this area down here, potentially for a test here at 30.63. I think we had it marked on here. Yeah, I said with a pause at 30.64, with a pause at 30.64. So I think there's a possibility we just go in and hit some stops here, and especially we come into the weekend. Once we get that vote, this was yesterday's bias chart support there, and that held basically right to the pip before we saw a little bit of a rally off of that of almost 60 pips, and then we rotated lower, coming here to this 31.28. But I think there is still that opportunity that we can slide down here to about 30.64, which we're seeing that on the daily if we do gun those stops. And that may be the case, depending on how events change, because that's essentially what's it is. We're being held hostage, and key thing is we're starting to slide back below here on a very short-term basis. Resistance is going to be right there at 32.15, and we're looking at 31.64. Let's go move into the Aussie dollar. Okay, the Aussie continues to weaken. The overall target 68.80 remains in focus. Now, the market would require a daily close above 72 to neutralize a downside pull. Resistance is going to be 71.42 with initial support at 70.25. So let's go ahead and move into the Aussie. We've had a real tough time, maintaining any kind of upside momentum. And obviously the Aussie is going to go on and move to a certain extent in concert with the Kiwi, or it's affected. We would need a daily close above the 71.42. If we got some China news or whatever, and that looks somewhat further down the road than sooner. But if we got some kind of an upside pop or something, the key would be, could we even close above? You could see an upside pop and then the market turn around and finish way down here. So the key would be the 71.42 for a day. That's what it would take for us to go and get above that on a daily close. Initially, resistance is going to come in still at this 71.42. If we get, I hate to go in and say resistance is going to be just 40 pips higher. Certainly, it looks like the door's open for us to move lower, but support comes all the way down here at 70.25. I think that we're going to probably end up eroding and taking a fall further over time. Now, how quickly that's going to take, we shall see, but the market really is open to taking a slide, and we'll have to see what happens here with the dollar index. But certainly the momentum is going the way of the dollar index. So support's going to go on and come in at 70.25. I think that this market is susceptible. So we've had it at 70.53, but I think at this point you may see a little bit of short covering come in, but I think that the market is very susceptible to that move lower here. And we're going to go on in and move this up. We actually had 71.45. We'll stay with that. But if for some reason the dollar would pair back, certainly doesn't look like it. Any moves in here really doesn't mean anything until you get past 71.42 level, which we have 71.45 as our resistance. One of the things that we talked about during the New Zealand data was looking to add some additional cross rates for our analysis. One of the gentlemen yesterday, last night, asked me if I'd look at the pound versus the aught. And I put this together just yesterday, and we'd done the analysis. And one of the things that we looked at that posted into the room was that we had seen this failed breakout here. And my thoughts were any rallies up to here would be looking for the market, any trap bulls to get out. But we're looking for short covering to come in right there, 85.06. And if we look at the low has been 85.09. So we did not too bad, missed that off by 3 pips. But we have seen a pullback, a pop back here. But as I mentioned, we're kind of trapped right in this area here, but we did go on and get some bulls, I believe, that got trapped as the market broke. And as I was indicating, any moves back to 86.42, I think also 86.66 was a 61, 86.60 is a 61% back of this move. But we did go and take that slide, and we're looking for short covering to come in at 85.06, came in 3 pips higher at 85.09. We saw a nice pop back from that area, but at this point now almost 50 pips from this area that we're offering for short covering. But as I said, we're going to be adding some additional coverage for cross rates here on the buys chart. So let's go on and move on. Let's go and move on to the Canadian dollar. The dollar CAD has remained resilient overall despite crude's atmospheric run. Crude is beginning to lose momentum on intraday levels. Tomorrow may see a further, that being today, may see a further pullback and set dollar CAD on a big run. Initial resistance will be 34.66, followed by 35.04. Support is 33.92. So looking here, we've held up very well. Now, we had, the other day, remember we had that 34.12 and it was a 50%, and we're looking at that as being some, a tough area to get above. And then we did go on to see that pullback, but even then that pullback was limiting. I had a bid working at the time at 33. Afterwards, I thought that, which it did a prior week before, I thought we'd dip to further lows in Asia. Well, we dipped a little bit, but not very much. I thought we might make it around 53. And I thought it might even get down to 48. Heck no, this thing held up very well at 70, and then we saw a pretty nice little move on yesterday. Actually, when the market, and we saw crude start to back down yesterday, we saw CAD ready to zip up. And we've pulled back a little bit, but as I mentioned, this market has a lot of gusto behind it. And I think that if we do see crude further deteriorate, haven't seen it yet, it has come down a little bit, but I think we could start to lose some momentum. Boy, this thing could really rip up. And where it is, well, I'm looking for 34.49. And then, well, here's the 34.49, but we're looking at the old 34.66 area here. And let's get back here. So there's that area that they initially had trouble with, but we're looking for the next move up here at 35.04. So we're going to go mark that off as 34.66. That's where the real resistance will come in. If you start to take off, you'll probably see a pause there. It doesn't mean it's going to sell off from there. We may pare back a little bit to upper 40s, mid 40s before we reassert ourselves. But I think we could make quick damage to get on up to about 35.04. The overall upper targets, remember, we had was 36.50. We'll see if that comes through, but watch out. If crude starts to slide, this dollar CAD will probably rip, especially when you think about where the dollar is, and the dollar index is now, after getting a daily close above the 86 and 96.81, is open to power much higher. And we'll certainly get to that in a little bit. With support being 33.92, so let's move back in here. With that, let's go and move into the peso. Now, the peso has staged an impressive rally akin to a rising phoenix from the ashes. The market's key challenge will be 1943.5, which is the 78% of the 1875 to 1962, confluencing with a level of 1943.4. Support is 1928.2. So let's go and take a look where we stand here with the peso. This has been a huge move here, and this is what we're looking at here on the peso. 1943.5 is going to be the 78% of this entire move, 1875 to 1962, and where I think that the market wants to target. Now, yesterday we had 1936.4 I mentioned that in the chat room. And I thought that was going to be a good area for bulls to lay off. And certainly we did see them lay off here. We did see the market turn around and go and dip right up here. We just pushed just above it a little bit. I think we knocked off the 37. And we saw a decent little pullback here. Not huge, but decent little pullback from there. You can see from 37 down to 27 and change. Before we assert ourselves, and I think this target, and it's been a phenomenal run all the way back up here in the peso, and we could eventually still break out much higher, but 1943.5 is going to be the 78% of this run, and that's confluencing with 1943.4. So that's what we're looking at as far as resistance. Could we push even higher? Yeah, we might even, if they blow some doors right here, could make it to 1947. You can see that coming across here, right there, and that coincides with this low here as far as the body. So we could push up as high as 1947. You don't want to be shorting this, but like I said, look at the reaction. We'll see. I would think we'd see a reaction here around this area. Now, one thing about the peso, it generally overshoots anyway, so probably would overshoot that, maybe come up to 44. But you know, stretch side, yeah, possibly 44 on this stretch coming in right there. Well, actually, I meant to say 1947 coming across here. We shall see. Let's go ahead and draw that line in here. There we go. But for now, we're going to stick with this, which is 43.5, which is a 78%. But we can get a stretch up here to 47. Oh, we can definitely change this to bullish. Our support was 1928. We'll see if we can move that a bit. We'll put that support coming in right there at 19. We'll call it just 1932. But we're certainly on target to go for this right here, this 43.5, 78%. But be wary, we'll probably overshoot that. This is right where we should see some, I would think, some avid selling coming in here if we were able to run up here to 1947 too. Take a look at crude oil. The market continues to stay here. You know, if you look at it on a daily basis, still holding up very well here. But we're getting a little bit tired, I believe. We saw this good dip here yesterday, and one of the things that I'd point out here early in the session too, here was our 59.76, and I kept posting it saying, "Hey, look, the key is going to be a 2-hour close. Can we get that 2-hour close of a 59.76?" And we didn't, and then point out this medium-legged doji, and then the wheels immediately fell off the caboose, and we actually rallied. But then I was advising here, one of the guys in the room, hey, look, we're going to come down here and probably take out, go to new lows, but we're going to find some good bids on those new lows. And certainly we saw this market come right back. And then I posted that the resistance was 59.15 to 59.20. We topped out here at 59. Let me see, it says 23.5, but I think I remember seeing it getting up to about 30 and change. And then since then, we've taken a bit of a slide here. But I think that we can continue to start to lose. I think any moves back up here, that's going to be your resistance at 59.23. If we start to slide, watch out with this dollar cat. That thing may take off like a scalded dog. You can see on a closing basis, looking at the 2-hour chart, I always like to go with the touches. This has been held up very well as 58.73. But as I mentioned, if we do start to slide, boy, this thing is really going to come undone. And I'm going to go with support being down here at 58.12. 58.12. Keep an eye on this crude, because if we do start to slide, boy, that dollar cat is going to take off. You can see the importance of the buy touches right here, and why I thought that when we would come down here, we would take out the lows, and I think they took out the lows by about 15 cents or something like that. And I thought that we were going to find some pretty good bids, and sure enough, we did. Let's go and move this lower here. There we go for today. Nice little rebound here in the dollar yen after taking that dip. After a decent rally from the intermediate target last week, this pair is stuck in neutral. Upside appears quite limited, the market hanging on to the 1134 level, but a break seems imminent. The downside target remains 929, which is still in the crosshairs. Upside resistance 1187 would be a stretch. So let's go and take a look here where we stand here in the dollar yen. So I did take this dip down here into the tens. It seems like we're just hanging on. We saw a nice rally come off of here. Remember, we had this intermediate target here, and that's exactly where they found the support. We still have 927 as a pivot, is our ultimate target. And we saw that recovery, and we saw a smart recovery. And initially thought, okay, this thing could even push even higher. And I thought if we hung around, we might still see another push a little bit higher. I thought we might make it into the mid 70s a little bit, but stay bid there and then roll over. But a lot of things have happened with the equities weakening. We've come back smartly here in a short, trying to think of the right words to say, but on a very short-term basis, I think we've come back. I don't think anything's going to be sustained in any way whatsoever. Looking here, the resistance is clearly going to be this 1080, and it may have a tough time trying to get to there. So, but we'll go with that, and we'll also take a look at it on a 2-hour chart. This is where the market ran out of gas earlier, and I had taken a short at the time, which is the 1063 area here. Moving right here, I think right there. 10. If for some reason we get a rally, I don't really see that necessarily happening. But if you're looking for areas here, you know what, right there, that'd be 1073. So that would be, and that may even be asking too much. But at least you'd know where. If we see good data is where the market, people are going to looking for the market to step in and take the other side. That'd be 1073. But we did take this dip down here already. A nice move down here, this 1002, before coming back rather smartly. On a short-term basis, if we find a dip, I think you'll still find some buyers on a very short-term basis, almost like a scalp type basis. And we think those will come in at 1093. I think we're going lower overall, but let's see some buyers come in. But that'd be a short-term basis because, let's say we get GDP tomorrow, and let's say this market's just coming apart. That'd just be barely a pause before they end up ripping even lower. Depending on, like I said, if you were to do that on a Friday and we're breaking lower, I don't think anybody's looking to buy 1093 other than maybe a little bit of a quick short cover, and the market pops back up to around the 10 teens, like 1017, and then turns around and heads even lower again. And let's go and move into the Aussie. As I mentioned here is we're going to be adding some cross rates. I took a list and some suggestions from some of the people the other night when we had the New Zealand data, looking at the Euro Kiwi, the Euro Odd. One of them was just in fact this one, the pound versus the Odd, and also the pound versus the Kiwi. Now, once again, one of the gentlemen asked me last evening about if I could post a chart here on the pound versus the Odd. And we did, and as I mentioned, we got this break. That was a failed break here, obviously on the woeful news. We broke them lower, but I think we trapped some bulls because we'd taken out this high and we've broken out of this trend. And my thoughts were, like as I'd mentioned at the time when I posted this in the room in Asia yesterday, only rallies would be looking to sell, but dips back to 85.06 is where you'd see some short covering. Well, the low for today has been 85.09, so off about 3 pips. But I think, as I mentioned, we have trapped bulls, so I thought they would use this opportunity on a dip here. Shorts should come in and cover, but any moves back up in here, I think we would find sellers. Well, we continue to remain under pressure now, so we might even take out some of these trapped bulls if we break lower here. We had resistance here coming in at 86.43, with 86.60 being the 61% of this move. We have taken this dip down here with 85.06 support, but as I mentioned, 85.09 was the and we're looking for covering to come in at 06, but it looks like our low was here at 09. So moving on, let's get to the Aussie yen. Well, we've languished here. I was looking for a move ultimately to 77.86. I think that's a 78% of this move. We got as low as well, pretty close, 77.91. 77.91. And a nice little hammer. But you know what? The upside been really, it's been quite limited. Resistance at this point is going to come in right there. We'll actually give it a little bit of room. Just 78.48. There. And support. Well, this is a key on the daily, so we'll go with this, but we're going to go 78.48 for resistance. And we'll go 77.75. And let's go move into the cash dollar index. Now we mentioned that 77.75, by the way, is because that actually had been support for us before, and that caught the lows at the time because we were looking at it right there on the daily. I think that at the time the market had dipped just a little bit, but well, had dipped below that. At the time, it found some nice support on this first run here. We kept this and we took a dip and we saw a pretty nice, smart rebound, kind of hung around here, but we'll go with this, as I mentioned, as our support level here. Let's go and move into the cash dollar index. Well, the thing I was harping on yesterday was, hey, look, let me see. The proof in the pudding is going to be if we can get a daily close above 96.81. And you can see why that has been so important, because you see these, as we broke lower here, the high here on the return back was 81. Then we tried to make another run, failed, and we saw this market break to lows, okay, take out the prior lows. We came back, and where did we run out of gas? Right there at 81. I mean, it might have been like 80 right there. And then we dipped back, we came back, and looked like we were coming on the vengeance, and we get above 81, but we closed below it. So to me, yesterday, you know, to me, we had our resistance at 97.08, but the key thing was, I kept mentioning, watch that daily close, watch that daily close. It's going to be all about this daily close. Well, guess what? We got the daily close above 96.81, and go here back into the analysis. The dollar index closed above 96.81, opening the door for a challenge to 97.66. Support comes in at 96.48 with initial resistance at 97.09. Now, going back here on the cash dollar index, we talked about the 2 hour coming in yesterday at 97.08. There we go. And today we've made it up as high as 97.05. Okay. You expect it to be a little bit of a pause, but like I said, the key thing is with 96, going back here on the daily, with 96.81 being taken out, the door is open for this move up here to 97.66. That's where the door is open for this market to move to. There's, you know, the key areas I'm looking at. Well, to this morning we'll look at 97.08, but I really don't expect a lot of resistance until we get it here to 97.28, and that bodes a little bit difficult for the euro. Where we may get a pause here, as I mentioned, we got the Spanish inflation data, and we saw where that Spanish inflation data came in the best in quite a while. That provided a little bit of a bid off of these lows for the euro, and then you can see the dollar stalling here. We have some German inflation data coming out too, so you might see a bit of a pause too. But let's not forget the momentum has shifted back up here with the dollar with this close above 81. So why I think that the door's open for a move, an eventual move to 97.66. May see, like I said, got 08 today and a pause here at 28, but it's hard to take this other side here. And if moons keep staying weaker, hard for the euro to make a case for higher prices. So let's move back into the 2-hour. Overall, the support would be 96.48 on a shorter term basis, though. 96.68. Overall on a daily, 96.48, but on the bias chart, it's going to be 96.68. Oh, that was actually a bias chart for yesterday, 97.06, not to split hairs. Today's high has been 5. So it's going to be 8. And look at this other area, 28. So if we do look at that slide, look at these two areas here. That's going to be key. Let's go move into the gold market. I was a bit surprised to see gold pair back here in light of this slide here in equities. I mean, we come up to the 1323, could see a bit of a pause here. I mean, we have our support here from yesterday at 1309, but I was a bit surprised to see this market slide back. What we'll do is we're just going to move this down to a level that we had before, just below this key 1304, which is going to be 1303. I think you'd see some short covering come in here. And let's take a look at here on a 2-hour. That's pretty clear. On a short-term basis, right there, 1315. And on to the bunds. We're coming close here to taking this dip here with the pound versus the odd. Remember, we had that support coming in 85.06. We not saw a smart rebound off of that level here. Well, like I said, it came in 85.09, but a rebound of almost 50 pips here. We're actually challenging this here. My guess is now we'll probably dip below that, and you can see where they got that support coming in with these closes. Came in right there, 84.70. My guess is we'll take out the 85 here, but I think we may find some buyers just below this area here, 85.80s, 84.80s, I should go and say. Let's go and switch in back into the bund now, though. We do have German data come out. We can see we were hanging here. 68, I think it's 80 was pretty much of a stretch here, upper mid 70s. So we've taken a dip here. Support initially comes in at 68.12 initially. We could see further damage here. Let's go right here with 68.02 if we get that, the German data comes in. We saw the Spanish inflation data come in very nicely. So let's go with 68.02. Resistance is going to be right there, 68.44. Support's going to come in here at 11,358 on the DAX. And that's what we had, 57. So we'll just keep that there. We had resistance here at 11,451. We get this good German, if the German data comes in, we're actually going to push that for right there, 11,521. There we go here. As I mentioned, we're going to be adding some cross rates this next week. I guess one of them we will add will be this. As I mentioned, one of the gentlemen yesterday asked me to go and take a look at this and post a chart. And I guess we'll probably be adding the pound Aussie as one of the charts we'll be looking at, posting, you know, on the bias chart. So it'll be, and then we'll add at least probably maybe 2 more others. So just look for that. They'll start next week, and we'll go and get the bias chart posted out. And thanks for joining us here on the European Crossover webinar.